In 2002-3 and 2006-7, the average cash incomes of Australian dairy farmers suffered from very dry conditions, which affected water allocations and pushed up their cash costs, especially for grain and fodder. In fact, water has been a difficult issue since 2002-3, and this has had a big effect on milk production in recent years. Although seasonal conditions were better last year and the cost of purchasing grain and fodder was lower, water allocations were still low, particularly for those dairy farmers along the Murray. This year, however, seasonal conditions have been exceptional. The outlook for world markets is positive, and the average cash incomes of dairy farmers are expected to increase in real terms to around $100,000. And as Paul Morris pointed out yesterday, this is quite a bit above the 20-year average for the last 20 years. Now I'd like to go over what we see as the main driving forces in world dairy markets over the next 5 years. First, I want to summarise the key drivers of world demand before going into a little more detail for some key markets. The world's population is continuing to grow, and with it, the potential size of markets. Additionally, economic growth in the major dairy importing regions is expected to lead to an increase in per capita incomes, particularly in developing countries of Asia, North Africa and the Middle East. In these growing markets, we're also seeing a change in dietary intakes as incomes increase, and this is increasing the demand for dairy products. And there is still plenty of room for further growth in these markets. In China, for example, while there has been strong growth in per capita consumption of milk and dairy products, its consumption is still low compared with other developed nations in Asia, such as the Republic of Korea and Japan. In some of these growing markets, such as China, consumption is likely to outstrip domestic production in the short and medium term, providing export opportunities for exporters like Australia. One market where this is evident is in the market for whole milk powder. World demand for whole milk powders fell in 2007 and 2008. But since that time, these imports have bounced back and increased significantly, largely as a result of China. Chinese imports of whole milk powder jumped significantly in 2009 as a consequence of a melamine contamination in 2008. Domestic milk production in China had been keeping pace with consumption until the melamine scare, after which it slowed considerably. Chinese domestic production is not expected to recover sufficiently over the medium term to cover its growing consumption, and China is thus expected to continue importing significant quantities of milk powder over the outlook period. Other parts of Asia are also expected to import increasing quantities of milk powder. In the world cheese market, the Russian Federation and Japan accounted for around 55% of world cheese imports in 2010. If you include the rest of Asia, that share goes to around 62%. The Russian Federation and Japan are expected to continue to dominate world imports of cheese going forward. However, imports to the rest of Asia are also expected to grow. In particular, strong growth is expected in the Republic of Korea, where cheese imports are forecast to grow by around 10% to around 64,000 tonnes in 2011. Further growth is expected over the medium term as consumers increasingly consume foods such as pizza and pasta. The United States is also a major importer of cheese, but its imports of cheese are expected to decline following an increase in domestic production and a relatively weak US dollar. Now we turn our attention to the supply side, and we will initially look at milk production in the leading exporting countries. Milk production in the United States is forecast to increase by around 2% in 2011 to around 89 million tonnes. This increase is expected to be driven by expanding cow numbers and increasing milk yields. Over the medium term, US production is forecast to continue increasing in response to favourable milk prices being projected. However, the increase in US milk production is forecast to be constrained somewhat in the early part of the outlook period by higher feed grain prices. These are expected to ease in the second part of the outlook period, leading to stronger gains in milk production. Milk production is also forecast to increase in the EU, and like the US, is also expected to be held back by high feed grain prices. Additionally, EU farmers have to contend with ongoing cost increases associated with environmental regulation. EU milk production is, as a consequence, expected to remain below quota until the quota is removed in 2015. In 2009-10, EU production was around 7% below the quota. New Zealand production is forecast to increase by around 3% in 2011-12, with producers responding to higher farm gate prices. Increasing yields per cow and an expanding dairy herd, particularly in the South Island, are forecast to support the increased production. Most of this increased production is expected to be exported, given there is limited scope to increase sales into New Zealand's domestic market.